Good morning. You're watching Business World Live. I'm Jes Delos Santos. Let's go straight to our top story. The Bangko Sentral has kept rates steady at record lows to support the economy's recovery from the pandemic. In its first policy setting for 2021, the Monetary Board maintained the overnight reverse repurchase rate at 2%. Lending facility was kept at 2.5%, while deposit facility wasn't changed at 1.5%. Bangko Sentral Governor Ben Jokno says inflation may remain elevated but is manageable over the next few months. However, he noted the tighter supply of meat products could lend upside pressures on inflation. Headline inflation reached a two-year high of 4.2% last month on the back of higher meat and vegetable prices due to supply issues. The Bangko Sentral raised its average inflation forecast for 2021 to 4% from 3.2%. The next policy meeting is scheduled on March 25. Now, that move by the BSP has been largely expected by economists, but what would warrant future policy action from the central bank? To discuss that, as well as other major issues on the economy, we have economics professor and president of the Pamantasan ng Lungsod ng Manila, Prof. Emmanuel Leyco. Good morning, Sir Leyco.
Good morning, Jess. Good morning to our viewers.
All right, sir. We have the BSP keeping rates steady. Of course, a number of economists saying that this is the best move to actually make at this point, as uptick in inflation we saw last month is more of a supply issue. But what do you think would trigger future policy action here from the BSP?
I think if inflation continues to go up, I think the monetary intervention there would be to increase interest rates. However, that will really be difficult. That will really be terrible for the country today. We are trying to stimulate the economy, and low interest rate is favorable for our businesses, for money, for the money supply. However, if the inflation continues to go up, that will be really difficult for our monetary policymakers.
But at the same time, taking off from that point, Prof. Leyco, you have the BSP saying they're expecting inflation to actually remain elevated but still subdued. In fact, they did say as well they see it to be temporary in nature. Do you subscribe to this, and when do you see upward pressure on prices subsiding?
Well, hopefully the food supply stabilizes and market becomes more confident about money supply, about food supply. I think that would be good for the overall economic environment. However, if the food supply continues to be disrupted, I am not sure we can continue to expect that inflation will not pick up.
Mm-hmm. Given that as well, how likely are second round effects after the January spike in inflation?
I'm sorry?
How likely are second round effects after that elevated inflation that we saw in January?
Well, the confidence, the outlook of the market becomes challenged. We don't want to see inflation picking up, especially in the middle of this pandemic. So we'd like to see more stability. We'd like to see more confidence of the market with our economic environment. And so, like I said earlier, this is crucial for the food supply to come in, especially the staples, rice, pork, fish, the major staples of our people.
And dwelling more on pork, since that's really the front and center when we're talking about price pressures here, the move to actually put a price cap as well at the same time lower tariff on pork imports, is this the right policy direction?
Putting a price ceiling is never good, because in an open market, the prices will only stabilize, where the market, where the consumers and the producers meet. But at this time, there seems to be a feeling that there is a shortage of pork in the market. And then with a price ceiling, the producers or the traders will just avoid selling pork in the market because they are going to lose money. However, if they do that, that will only exacerbate the problem with our food because price ceiling for pork will also affect the prices of other commodities. So, for example, if pork is not available, people will shift to chicken, and therefore, if the supply of chicken is not sufficient, the price of chicken will also go up. So there will always be this domino effect on other food prices. So it's very important that our food producers or our food policymakers take care of this soon as possible.
All right, moving on from there, of course, you have at the same time that spike in inflation that we saw in January, pushing lawmakers to actually file for a third package of the Bayanihan measure. That has been thumbed down by economic managers in the past. How necessary is this move, and do we have enough fiscal space for this?
Fiscal stimulus at this point is the most important. I think that is the key to our recovery. First of all, fiscal stimulus can be looked at as the economic relief. And then in the midterm, fiscal stimulus can also provide the economic recovery. People do not have money in their pockets right now because the jobs they're losing their jobs. And therefore, how can they support the economy if they don't have money to spend? The only source of their money right now would be the government. I think globally, every country today is looking at the fiscal intervention to help them recover from COVID. And the Philippines cannot be stingy about it. The economy is tanking, jobs are getting lost, and therefore there's no other way but for the government to step up. And in a big way, it cannot be in a stingy way. You cannot make it like you come in for a few days, for a few weeks. It has to be a longer period than just a few days and bigger.
All right. Given that as well, if I'm not mistaken, Bayanihan 3, at least a proposal, would amount to roughly over 400 billion pesos. Would this be enough?
No, I don't think so. We made some computations and we saw that 400 billion is not going to be enough. We're losing money in the trillions, and therefore we have to match that. Maybe in terms of fiscal stimulus and perhaps stimulus for the local businesses in the country today.
And then at the same time, you have, of course, a number of economists saying that really the biggest stimulus for recovery would have to be the vaccine rollout. Given that, and given the pace that things are going, are we in the right direction? And how much of a stimulus really will this be?
There's no other direction to go right now. We need the vaccine and we need to roll them out as efficiently as possible. The U.S. has had operations problems, and therefore we could learn from that. We have to make sure that our system to roll out vaccine will be an efficient system so that we don't waste the vaccines. Remember, the cold storage chain is very important to maintain here. And in a country like the Philippines, a warm country, we are very much challenged by that. And therefore, the cold chain system will have to be ensured so that we will be able to maintain the efficacy of the vaccines that are coming. Procurement is just the first step. The rollout is the much more difficult challenge for us to face.
Okay, no other direction to go but to actually roll out those vaccines as fast as we can. Thank you very much for your time this morning. Professor Emmanuel Leyco of the Pamantasan ng Lungsod ng Maynila.
Thank you very much, Jes. Good morning.
All right, trading on a halt today as the country observes the Lunar New Year. Majority of Asia on a pause as well, but things looking uneventful here for the ones that are open. Both Japanese and Aussie stocks here edging lower. Japanese indices, as you can see right here, shedding some points here for the topics likewise, and both the Nikkei as well. In fact, looking flat here. The topics though on the downside, as well as the Nikkei falling by 0.3%. Australian shares likewise also in the negative territory here. As you can see, it has fallen so far 0.4%. Looking at Wall Street futures as well, the S&P 500 on the downside already here. As you can see, it was on the upside before broadcast here, but as you can see now, still on the downside. It's after it registered an almost all-time high in Thursday's trading, adding 0.2%. The Nasdaq likewise also, as you can see, however, on the positive here, strength in textures keeping the index afloat. Dow Jones also somehow underperforming here, at least Dow Jones futures. This is unemployment benefits in the U.S. dipped last week, pointing to possible signs that the labor market might be seeing a slight recovery. Majority of global equities also on a tear so far this year, amid signs that central banks are still keen on putting in place supportive monetary policy. But discussions now heading to a possible overheating as more stimulus is unleashed along with the vaccine rollout. Now, here are stories from the corporate front. Paymaya has launched a digital mall feature where users can buy products from its partner merchants straight from the mobile app. Company executive Mark Jason D says the so-called Paymaya Mall will help foster the growth and recovery of local businesses. The digital payments firm also claims that the new feature can potentially boost e-commerce transactions in the country amid the ongoing pandemic. Among the merchants whose products are now available in Paymaya's digital mall are Jollibee, McDonald's, Goldilocks, Rustans, Mercury Drug, and Buzi, among others. Now, the NGCP has asked the Energy Regulatory Commission to approve 41 capex projects set to be built this year. The Power Corporation filed 2 petitions for the implementation of its capex projects named Groups 1 and 3. Majority or 22 of the planned projects are due to be built in Luzon. 9 are in Visayas, while 10 are in Mindanao. The biggest project is the Visayas substation upgrade, which costs 18.71 billion pesos in Group 1. Meanwhile, the Western Luzon 500 kilovolt backbone project is the most expensive one in Group 3, which is priced at almost 19 billion pesos. For its part, the ERC said it has found the applications to be sufficient in substance. The required fees have also been paid, plus the Commission has set dates for the online hearings of both petitions. Here are other headlines we're watching today. The Mindanao Development Authority is gunning for a 1.35 trillion peso allocation in the 2022 national budget. This represents 27% of the proposed 5 trillion peso spending plan to realize major infrastructure and other projects. Among the major proposed projects that have yet to get off the ground are the Mindanao Railway's first segment, the Samal-Davao Bridge, and airports expansions in the main cities of Davao and Cagayan de Oro. Minda Chair Emmanuel points out that the region has been getting a share lower than expected for the last 4 years or so. Now, the Transport Department is finally starting the engineering design work for the Metro Manila Bus Rapid Transit Line 1. The flagship project was delayed last year because of the pandemic and lack of budget. But now the DOTR plans to push through with the project due to the increasing demand for mass transport. The World Bank approved the financing of the project in 2017 and is being developed in partnership with Manila and Quezon City. The total cost of the BRT Line 1 project is about $109 million, with the World Bank providing more than half of the necessary funds. However, the global lender says that the loan for the project is set to expire on November 30, 2022. And those are the biggest news from the business front this Friday morning, February 12, 2021. Catch Business World Live again at 3:15 p.m. today. I'm Jes Delos Santos. We are One News.